I often speak of corporate stories and insights into various Japanese companies and often refer to the idiosyncrasies of investing in Japan. This is a common industry topic, but I feel that people rarely offer insights, especially to international investors, into what these idiosyncrasies can mean in reality. I'd like to review some of my observations as an internationally educated Japanese national about some of the challenges that can face international investors and some of the conceptual mismatches when someone starts looking at investing in Japan. I have talked about the Japanese sense of homogeneity and how it impacts the corporate world. There are good and bad points to this, as with most things in the world. Japanese people are expected to intuitively understand each other's intentions in society. This cultural norm leads to a business environment with fewer standardized procedures, creating challenges for foreign workers either accustomed to more explicit guidelines or not accustomed to the cultural patterns of Japan. Japan's unique blend of socialist capitalism often leads to international misconceptions. While many companies still uphold lifetime employment and seniority-based pay, the annual spring wage negotiation season, known as Shunto, focuses on uniform base salary increases for all employees. Unfortunately, this practice has contributed to stagnant real wage growth since the 1989 bubble economy collapse. The absence of a clear meritocracy within Japanese corporate culture further fuels misunderstandings. Interestingly, some Japanese companies are now adopting Western salary practices, as seen with Renesas Electronics, which recently delayed annual pay raises globally due to an uncertain business outlook, a departure from the norm in Japan. The archetypal Japanese salaryman career path is very much that of a generalist. It can be uncommon for an employee to be placed in the same department or role for a long time, as there are periodic job rotations. A drawback of this system is that, for example, in overseas assignments, personnel changes typically occur every 3 to 5 years. This has made it hard for many to build relationships or develop specialized skills. From the context of asset management, many of the large financial groups typically engaged in job rotations. There have been cases where portfolio managers and analysts spend a few years before returning to the parent group level or moving to a different role. The good news is this structure has slowly been changing. Consensus building is an essential skill in navigating the Japanese corporate world. The nemawashi practice in Japanese companies, informal consensus building before formal meetings, has drawbacks. This traditional practice shows that Japanese corporate culture emphasizes harmony amongst all attendants to reach key business decisions in a unanimous agreement. However, the extensive time and cost involved in individually explaining proposals to executive members and gathering consensus can delay decision-making. These delays can lead to missed opportunities or frustrations with external parties. Given these issues, it will be interesting to see how Japan will deal with zombie companies. These are mostly small, uncompetitive businesses kept afloat by extremely low interest rates and government support, which is partly the reason behind excess capacity in the economy and prolonged deflation. As interest rates rise, many of these businesses may falter. But if the Japanese government remains too lenient and continues to bail them out, that will be problematic. I believe that the phasing out of zombie companies is essential to ensure the end of deflation. It may be painful, but it's a hurdle that Japan must overcome and will be a true indicator of societal and corporate change. It could be perceived in Japan as a radical step, as it may be seen as a decision being taken without the national consensus, and politically may leave a section of the population out of work. And without a meritocratic advancement system, these people could be left to navigate new corporate ladders that are already full of equally generalist employees without the requisite skills to thrive. Japan's commitment to egalitarianism protects the socially vulnerable. Yet the culture also can discourage individual standout success, as the Japanese proverb, "The nail that sticks out gets hammered down," aptly illustrates. For example, the government is currently working to set up special zones for financial and asset management businesses to attract skilled workers from overseas as well as domestically, which is part of the initiatives to drive the shift of household financial assets from savings to investment. To make Japan appealing, it will not be enough to just improve the living infrastructure for foreigners who work in the industry and their families. Japan may need to consider lowering its tax rates to compete with major financial centers like Singapore, Hong Kong, and Dubai. However, Japan's high tax rates, which include income tax, dividend tax, capital gains tax, and inheritance tax, could be a deterrent. From the perspective of ordinary Japanese people who bear a heavy tax burden, the preferential tax rates that could be introduced in the special zone to attract global talent may not be easily accepted. There seem to be various hurdles to nurturing an internationally competitive financial center in Japan. Japan, since the 1950s, was seen as a paragon of growth and business excellence. The economy continues to be placed in the top 5 of the world GDP, even with 30 years of deflation and minimal growth. These issues can be confusing, frustrating, and difficult to navigate from an outsider's perspective. While we continue to see things slowly change, it should be acknowledged it is not all negative from a homogeneity perspective. One such example is the recent progress on corporate governance reforms, which has been a driving force behind the Japanese stock market rally. Since the Tokyo Stock Exchange's initiative to name and shame the listed companies with a price-to-book ratio below 1 times was announced, the atmosphere of "we need to do it because others are doing it," and it's embarrassing and disgraceful if our company is the only one not improving to a PBR of 1, seems to have been created among listed companies. The movement may have been slow at the beginning, but it is rapidly evolving into a major trend, driven by growing peer pressure. This is a good example of how the homogeneity of Japanese people is having a positive effect on the situation. Another case is Japan, urged by the government, is currently experiencing nationwide wage increases even amid an ongoing issue with low labor productivity. Wage growth ideally should be achieved through increased labor productivity, as raising wages without this can harm profitability. While this is not ideal, I would like to believe that this could boost employee morale and in turn productivity in time. The nationwide effort to tackle the productivity problem should gather pace as everyone starts to feel the pressure and behave the same way. Japanese workers are known for their superior artisanry. Few would object that the phrases "made in Japan" and "monozukuri" have connotations of being high-quality, value-added products. Japan's manufacturing strength, often described as takumi no waza, artisanal skills, and anmokuchi, tacit knowledge, is a reliable competitive advantage. Japanese companies often stand out in research and development due to this unwavering commitment to excellence and meticulousness. Breakthrough discoveries have emerged from countless trials and errors in lab experiments. Despite the less glamorous nature of material science R&D, Japanese scientists thrive in this field. Their success is evident through numerous Nobel Prizes in chemistry. Japanese companies, driven by their willingness to endure trial and error, often invest in long-term, sometimes loss-making projects. Unlike Western and Chinese counterparts, they can endure long gestation periods over short-term gains. Although these companies may face stock market skepticism, their persistence could pay off. Once successful, the accumulated know-how becomes a formidable barrier to entry for competitors. A distinctive characteristic of the Japanese people is a tendency not to value pragmatism as a virtue. The belief that what is gained through hardship has value is deeply ingrained in the culture, which means enduring pain and suffering is encouraged in the face of obstacles. These cultural traits can be observed in many different places. The Japanese people believe in the quality of fortitude being an admirable trait. Often, enduring discomfort, emotional and physical, in an almost Zen-like belief, the outcome will be better or purer in the end. A somewhat extreme example will be in the case of gastroscopy during annual health checkups. While anesthesia is used in Western countries to alleviate patient discomfort, it has been typical in Japan for patients to endure the pain and discomfort during the procedure because they feel they should because they can. This can produce consternation from many non-Japanese people who see this as irrational, but is part of a national identity and belief around traditions and respect for what has gone before. The Japanese culture is unique, both positively and negatively, especially when viewed from a Western perspective. In addition to the cultural challenges, there's a language barrier. It is because of all these factors and years of experience, I believe that a successful approach to investing in Japanese stocks requires a deep understanding of these unique characteristics. Furthermore, in the Japanese stock market, where foreign investors' participation rate is high, analyzing these unique aspects of Japan from a Western capitalist lens can provide a significant competitive advantage in stock selection. I'm not saying Western capitalism is the best form of capitalism, but there's a lot that Japan could emulate to improve. In the world of investment, active investing has long been losing ground to low-cost passive investing. However, there's still plenty of room for active managers to thrive in Japan. The reason I believe this is precisely Japan's uniqueness.